Warning, what we're about to talk about is adult content. There are two things that are inevitable. Number one, you're going to die. Number two, you're going to pay taxes. Doesn't matter if you've earned money in a job or you've made money selling property or investments. Uncle Sam wants his fair share of your money. And that's where we have income taxes. So what we have right here is the IRS Form 1040. This is the form that we use to report to the government our tax situation. The U.S. government tax system is based on a principle called voluntary compliance, where our government trusts us to use our honor to report our income. However, the government has a way of checking up on you and make sure that you are in fact a person of honor. So anyway, IRS Form 1040, this is the form that we are going to use to report our income to the U.S. government, figure out our taxes, and determine whether, number one, we either get a tax refund at the end of the tax season, or we end up having to make a payment to the IRS. The IRS is the Internal Revenue System. That is a government's branch that is involved with levying and collecting taxes on the United States taxpayer. All right, so before we can fill out the IRS Form 1040, we have to gather several types of information. The most important piece of information that we need is called a W-2 form. A W-2 form is supplied by your employer at the end of the fiscal year. The tax year usually ends December 31st. So give or take a couple weeks, usually the end of January, your employer should be providing you with a W-2 form. This form will tell you how much money you made, your gross income for the whole year, how much money was withheld from your gross pay to pay federal tax, state tax, FICA. Remember, FICA was Social Security and Medicare. So using that form, you can fill out your 1040. However, let's say you've got a bank account and you've earned interest. That interest is taxable. So the bank will supply you with a form called a 1099 INT, which stands for interest. So if you've got one bank, you are probably going to get one 1099. If you've got two banks, three banks, each bank should supply you with a 1099, which you need to use to fill out this IRS 1040 form. Let's say you've got investments, like I've got investments, and my investments make money. I make dividends off my investments. That's income. So I am going to have to report that. So all of the companies that I do investing with, they need to supply me with a 1099 DIV or dividend form. So I'll get a 1099 from the bank. I'll get a 1099 from an investment company. I am actually retired from the military, so I have a retirement check that I collect every month. That's income. I have to report it to the IRS, so the U.S. government sends me a 1099-R, which lists what retirement income I made throughout the tax year. Everybody is different. There's not two people who are exactly the same. Some people own a home and they're still paying on a mortgage. Well, that mortgage interest that you're paying is tax deductible. So you might need a mortgage statement from your bank. If in your house you've made home improvements, maybe you've replaced a roof, or maybe you added solar panels or some sort of other energy saving improvement, sometimes there are tax credits for those, so you need records of those. If you are an employee and you have to purchase certain things in order for you to do your job, and let's say you have to travel, you might have to keep receipts of things you purchase. You might have to keep receipts of mileage. Maybe you donate to different organizations. Well, those donations are often tax deductible. Maybe you belong to a church and you pay tithes and offerings. those tithes and offerings can also be deductible. So you need to have a big stack of papers, records for you to fill out your taxes. If you have daycare and you make a monthly payment to a daycare provider, you can get credit for the daycare that you pay. Maybe you've sold property and you've made some money off your property. That's like capital gains. You need information about that. Maybe you had a rich uncle who died and left you with an inheritance. You got to report that. Uncle Sam wants his fair share. So in order to complete this form, you need several different documents. Now, President Trump gets blamed for a lot of things, and I got to tell you, I got to blame him for this, okay? He actually simplified the income tax process and the income tax form. Before he simplified it, we had three different forms. We had a 1040 long form, we had a 1040A short form, and we had a 1040EZ. Now, we just have one form, and that 1040 form is way less complicated than it used to be. And then President Trump gave us a bunch of tax credits, which meant more money in our pockets. So I'm going to blame him for that. All right, so let's talk about completing the 1040 form. The first part of the IRS Form 1040 is pretty easy, pretty self-explanatory. So we start at the very top. It has your tax filing status. Now there's a couple of different statuses that you could choose from. You could be a single person. So if you're single, you'd mark single. You might be married and you're going to jointly file. So you're going to file together. So you're married filing jointly together. Maybe you don't want to do that. Maybe you're married and you're going to do your taxes and your spouse is going to do their taxes. So you would file as married filing separately. There's a status called head of household where you would be taking care of dependents and so you might be head of household. You would check that. Or you might be a widow or a widower. And so there's a whole nother status involved with that. So first thing you do is you determine your filing status. The next part is just simply filling out your name. And if you're filing jointly, then you would also fill out your spouse's name. You'd start with your first name, your middle initial, and then your last name. And then you would put your social security number. After that, you would fill out your address. Now over here, there's a little blue box and it says the presidential election campaign. So this is a little interesting thing about a tax return. You could have $3 being donated to the presidential election campaign. You check yes or you check no. Now, whether you check yes or no has absolutely no bearing on your income tax. But what this presidential election campaign fund does is it allows the candidates to draw money from that fund. It doesn't matter if it's President Trump or Joe Biden. It doesn't matter who it is. They're allowed to draw money from that fund to pay for their campaign. So as a taxpayer, you get to choose. Hey, I'm going to donate $3 to that election campaign fund, or no, I'm not going to. Next, we have the standard deduction. And the standard deduction we're going to get to a little bit later. But for this situation is, can you or your spouse or your child be claimed by somebody else? And that's important in a standard deduction. So, for example, my mother and father got divorced when I was like 8 years old. And as part of the divorce agreement, although I lived with my mother, my father was allowed to claim me on his income tax. And so, when he claimed me on his income tax, he got the tax breaks, he got the tax credit, and my mom didn't. So, I could be living with my mom, but my dad can claim me on his taxes. So that's where that block would be checked. Now, you would list your dependents. Your dependents are anybody who lives with you for over 6 months. It could be children. It could be maybe you have a parent living with you, an older parent living with you. Maybe you have a brother living with you, a sister, something like that. Somebody that you provide care for food, clothing, lodging, medical, all that stuff for little more than 6 months in a year. So those names would go there. You'd put their social security number and their relationship to you. And then also, do they qualify for a child tax credit? Because if you have a certain number of children under the age of 17, you get a tax credit for each one of those children. Now, when they turn 17 going on 18, you no longer get that tax credit. Okay, so it's a big deal. Trust me, it's a big deal. Now we get to the fun stuff. This next section right here deals specifically with your income. All right, so some income is earned income, some income is unearned income. So on line number 1, we would write down our wages, salaries, tips, etc. That's considered earned income. Where would we get that information? Well, it's going to match right up with the information that's provided on the W-2 form. So we need the W-2 so that we can fill out block 1 of the IRS 1040 form. Block number 2, block number 3, block number 4, all of that has to deal with unearned income. This is income you would get from interest on banks. Dividends, like so for instance, if you make money on the stock market, those dividends, you would have to report that there. Pensions, okay, so I mentioned that I was retired from the Navy, so my retirement pension information gets recorded right there. There's all sorts of things. Do I have annuities? Do I have Social Security benefits? Do I have capital gains? All of these other things. Now, I may not have any of those things. So I don't get Social Security benefits. I don't have capital gains benefits. So in those situations that don't apply, I would just simply put a 0 in that block. But every block has to have something in it. So it has to have either a number that represents the money that you've made, or if it doesn't apply, you need to put a 0 there. And so you just start adding up the lines, and when you get to line number 7, that is your total income. That is the combination of your earned income. Remember, earned income is wages, salaries, tips, and your unearned income. Those are things like interest and dividends and pensions and annuities and things like that. So now we're going to subtract those lines. We're going to get an adjusted income. And then we have something called the standard deduction. All right, so you can choose to either take a standard deduction or you can itemize. And basically, the choice you make is going to determine on which one is going to be the most beneficial to you as you're filling out your taxes. So, for instance, if you have a job where you have a lot of expenses, you do a lot of traveling and you stay in hotels and all of that other stuff, or you're self-employed or something like that, you got to keep track. You have receipts. You have to keep all these records, and you can do itemized deductions. Most people will just take the standardized deduction. And in this column, if you're single or married filing separately, then the standard deduction is $12,200. That gets subtracted from your total income. If you're married filing jointly, it's $24,400, so it's double. That gets subtracted from your income. And then you have your taxable income is on line 11. And that number right there on line 11 is what the U.S. government is going to tax you on. So the next step is taking that number, looking in the tax tables and trying to figure out how much tax you owe the government. And line 11 is the end of page 1. Now I have both pages of this form listed, so now let's go to page 2. The tax tables are an interesting document, and they list taxable income based upon divisions broken up by thousands, okay? So I'm kind of looking at 4,000, 5,000, 6,000, 7,000, and those are subdivided into sections on hundreds and fifties. So let's say that this person here made $43,375. So I would go into the section of the tax table, it was 43,000, and I got to look for 43,300, and then between 43,300 and 43,350, or 43,350 and 43,400. And there's a couple of columns. One is a person filing single, one is married filing jointly, married filing separately, and then the head of household. So at this table is where you find the tax. And that number that's found in the tax table is going to go right here in block number 12A. Okay? That is the tax. So on page 1, we had our taxable income. We look up that number in the tax table, and that will give us our tax, and that's what goes in line 12A, okay? Now, based on that number, we're going to start taking things away, and this is where we get into schedules. And schedules are little tables, little formulas, little things on the side that you have to go separately and fill these things out, and based on whatever information is provided on that table, then you would enter them into the different types of lines. So for instance, if you have children in daycare and you are paying a daycare provider, you get, credit for that. Everybody who has children under the age of 17 gets a child tax credit. So you would figure out your child tax credit and any kind of credit for other dependents, and that would be on line 13. And then you would subtract these different lines, and you would come up with line 14 would be your total tax. This is what you owe the IRS. Now we go back to your W-2. As an employee, you earned a certain amount of income, and a certain amount of money based off that gross income was withheld from your pay for federal taxes. You find that information back on the W-2, and you would put that one right down there from on line number 17. So your total tax is on 16. Your tax that was withheld from your paycheck is on line 17. Now, here's where it gets interesting. If the line 17 is larger than line 16, then what happens is you subtract 16 from 17, and whammo, you get a tax refund. Everybody likes a tax refund. However, if line 17 is less than line 16, then you have to subtract line 17 from line 16, and this is what you owe the IRS. Boo! And that's how we fill out a tax return. But there's more. It's not legal until you sign your name. Now, a lot of people don't like doing their own taxes, so they would have a tax preparer do it for them. Like for instance, my taxes are so complicated, I go to H&R Block. Well, H&R Block, there's a section for the person who prepared my taxes. Their information goes here. Now, it isn't anybody who just up and do tax returns. They have to actually get a special permit from the IRS, and they would have to supply that number there. So all of that information goes on the tax return. And you can either submit it through the mail and wait, or they can submit your tax return electronically, and they will take that money. If you're getting a tax return, it would come, direct deposit into your bank account. Or if you want to, you can get a check. My son, the accountant, he's like, I'm going to make the government spend money on a stamp. So he purposely requests his money comes in the form of a check so that he can stick it to the U.S. government and make them buy a stamp to send him his tax return. But anyway, that is the 1040 IRS form. We're going to have fun preparing it.